Good afternoon, ladies and gentlemen. Welcome to our chat room, the Financial Sector Regulators Joint Messaging Chat Room. My name is Dali Mwalamugala. I'll be your host for this afternoon. And we'll just give a few more minutes so that we have other people log in. 5 more minutes to start the show. Thank you.
Hi, what's the duration of the whole thing?
Hello, it takes about an hour.
Cool, no problem. Thank you.
We all want to get ahead in life. At the same time, we want to put our hard-earned money to good use. Maybe say investment. However, investing in the wrong avenues can lead to tragic loss. To avoid this, before you invest, you must think through an investment decision. Identify the roles and responsibilities of the financial service provider or intermediary in the buying and selling of investment products. Be aware that there are cybersecurity risks of using online platforms for investing. Your investment decision must be guided by factual information. You can get factual information on an investment by researching and identifying a licensed financial institution that you want to invest with. Undertake research on an investment product before you commit yourself. Understand the available channels for buying and selling investment products. Use a licensed or regulated financial service provider or intermediary to buy and sell investment products. Be a smart investor to live a better life. This message is brought to you from the Financial Sector Joint Messaging Communications, a partnership of Bank of Zambia, Pensions and Insurance Authority, and Securities and Exchange Commission.
Good afternoon once again. Welcome to the Financial Sector Regulators Joint Messaging Campaign chat room. This chat room has been set up by the 3 financial sector regulators, that is the Pensions and Insurance Authority, the Bank of Zambia, and the Securities and Exchange Commission. So to start our program, we'll give a brief background of why this chat room was set up. Okay, so like I mentioned, it was set up by the 3 regulators, and the reason was the rise in the financial fraud cases that we have experienced in the country. So as regulators, we observed this with concern and decided to do something about it. So mainly to look at that, and also just to raise awareness of the existence of the regulators, and also to encourage the public to report any suspicious financial fraud activities. So last week, we diverted the chat room a bit. We looked at the World Investor Week, which the Securities and Exchange was launching. So this week we're getting back to our program, which is the messages that we have as a joint messaging campaign working group. So we are in week 7 of the chat room. That was last week. So since we skipped the week, so we are now looking at week 8. So the message that we're supposed to have been looking at that we circulated was a flyer on cryptocurrency. And this is what the flyer looked like. So some of you might have seen it. We posted this on our website, on our Facebook pages, and also just our different social networks. So it gave a brief history, a background of what cryptocurrencies are. So it's a form of digital investment. And also we mentioned that it's complex and it's risky. And we also shared some tips of what you need to do as somebody who wants to invest in cryptocurrency. You need to select, to understand the type of product that it is, and also just do some research before you make your investments. So today we are joined by an expert from the Bank of Zambia to just shed more light on this topic. Our guest speaker today is Mr. Kombe Kaponda from the Financial Markets Network. Sorry. Yes, as I was saying, our guest speaker today is Mr. Kombe Kaponda. He's a Financial Markets Networks infrastructure specialist from the Central Bank, and he's a seasoned ICT networks and security solutions engineer by profession with over 18 years of experience in ICT management and progressive ICT, financial markets infrastructure management, and cybersecurity. Mr. Kombe is a scholar of a Doctor of Business Administration and holds a master's degree in ICT regulation, policy, and management. He also holds a Bachelor of Science in Computer Science and is a chartered digital financial practitioner certified by DFI with the Tufts University under the Fletcher School of Law and Diplomacy, and also certified financial technology specialist with the University of Hong Kong. Mr. Kaponda is also up to date with financial technologies, including applications of artificial intelligence in finance, cybersecurity, in digital financial services, cryptocurrency, and the blockchain technologies, and also consumer protection as a business strategy. He also holds several ICT technology vendor certifications, such as Cisco, etc. So without further ado, we'll start our discussion, and I'll allow Mr. Kaponda to introduce himself and share his presentation with us. So before we get into the presentation, just some housekeeping rules. Please mute your mics as you enter the chat room. If you have any questions, please post them in the chat. We will attend to them at the end of his presentation. You can also put up your hand at the end of the presentation. It will also be attended to. Thank you so much. Mr. Kaponda, over to you.
Thank you, Starly, for that introduction, and good afternoon, good morning, good evening, depending on where you're joining us from. My name is Kombe, as mentioned. I'll go ahead and share my presentation, and hopefully we'll have a very informative and interactive chat. Okay, hoping everybody is seeing my screen. I'll go into full presentation mode. Okay, so as mentioned, I've titled my presentation just demystifying and making cryptocurrencies and blockchain more understandable to the layman's language. And as the introduction, I'm a financial markets network infrastructure specialist from the Central Bank. And in terms of the disclaimer, the views that will be expressed in this presentation are mostly my views and not necessarily the Central Bank of Zambia and its executive and board management. The presentation is not investments advice, but all official publications and peer-reviewed journals are cited. So to just get us started, in terms of the presentation outline, I'll look at the introduction and probably just bring you a little bit back to the history of money, financial technologies in terms of fintech. Then we'll deep dive into cryptocurrencies. We'll talk about crypto assets. We'll talk about the blockchain technologies, applications in terms of solutions. We'll talk about the benefits versus the risks of cryptocurrencies. We'll talk about what regulators are concerned about. We'll touch a little bit on central bank digital currencies, and then we'll look at the global perspective in terms of initiatives. We'll look about stable coins, and then we'll open it up to a Q&A. So in terms of introduction, the global financial crisis of 2008 sparked quite a number of issues. One of them where regulators were cited for not being too efficient. So we've seen a lot of stringent and strict regulatory requirements after that. And just a year after 2008, in 2009, we saw the birth of the most dominant cryptocurrency, which is Bitcoin, which already has the highest market capitalization. But in terms of just history, economists estimate that up to this day, about 92% of all global transactions are electronic. So we have a very small percentage dealing with physical cash, which is less than 8% now. And most of those, especially in the African region, are prevalent on digital platforms, mostly on the mobile. And the reason is simple, because investing in a brick and mortar investment for a bank in a remote area plays to be a little bit difficult, because a big CEO of a bank would not invest that much money into a brick and mortar and invest in staff and pay for utilities and then only have 2 customers. So mobile has changed that game. Mobile has allowed, wherever you've got a cell tower and you've got a mobile signal, you can have transactions going back and forth either on SSD or even on smart applications. So in terms of the history of money, money has had a very rich history. It all started in the 1400s AD, where the form of exchange was mostly in terms of stones. That was documented in terms of yap stones in the Micronesia area. That's where you owed value because you own a stone, and that value moved from person to person depending on how the transaction went. Then it evolved to go into the stones and the shells, tokens, gold most prevalently. And then in Africa, mostly we dealt in animals as a medium of exchange. But all that came with trust. So there has to be some kind of underlying trust for you to trust that medium of exchange and use it. And most of it was, you would verify by looking at it. Back then, if it was gold, you'd verify by either biting in it or just inspecting it physically to make sure that it's valid. But over time, you found that most of these were bulky, and to move them from one part of the world to another as trade enhanced, it was a little bit costly. It was expensive to put it on ships and send it across the Atlantic. These medium of exchange were heavy, and sometimes bandits also took advantage. You have cash in transits and people attacked and those things stolen. So slowly but surely, we started to evolve. Instead of using these bulky medium of exchange, we saw now in the 17th century, China introduced what today we call paper money. It was easier to carry. It was easy to move across the world. And then the Romans, the Indians, the Persians got on board and improved on it. But underlying issue was there had to be trust in that medium of exchange, that store of value and that unit of account. And in Africa, most dominantly, we've used animals and shells. A classic example is in Botswana in 2002. They had over 3 million cattle, higher than the population, according to the UN census. And we've seen that evolve, but slowly that is changing. So from digital, we find that technology now is disrupting across. We've seen technology disrupt the way we communicate in terms of letters in a postal box moved on to fax, and we can hardly see any faxes. We can see electronic fax, but now most communication is via email. Newspapers also evolved to electronic media like TV, but you see most communication now being predominant on websites and social media. Same with currency as a medium of exchange. We've seen from fiat currencies to cards, debit cards and credit cards, and now to these cryptocurrencies. So it continues to evolve. But most importantly, all these finance coupled with technologies. So finance and technologies come together, and then we have what's called financial technologies, short for fintech. And these have now come to disrupt the physical bills and coins. And the reason is they've got advantages. Notable advantages are they're instant. If I want to send money to, say, my grandmother in a village, I can send via mobile money and they'll receive it instantly. 10 years ago, I would put that money on the bus and it will be delayed for maybe 2 days. Worst case scenario, if the bus breaks down, it would be longer. So we have now instant, faster, and real-time digital payments, which are convenient and they are more trusted. And in terms of costs, they are minimized. If we are dealing with cash, you have to make sure that cash has been printed properly, has to be secured. You have to make sure you take care of the cash in transits. You have to hire security to move it across, and you have to, once the currency becomes sold, you have to destruct it at the end of the process. So that's costly, and you find that digital financial services have got advantages, and almost the whole world is picking up on that. Zambia is no exception. I put this diagram from the International Telecommunications Union just to show how easy it is to move value across, electronic value in terms of a mobile, where you only have even a 2G feature phone with a SIM card to the nearest base station on a cell tower, and then you go to your terrestrial network and you send it across the world. So now let's deep dive in what cryptocurrencies are. So what are cryptocurrencies? Some people refer to them as crypto assets. They are just a form of a financial asset, which is based on mathematics, an algorithm, which is decentralized, and it's convertible currency. So let's look at the layman's language. Layman's language, what's cryptocurrency? Cryptocurrency is basically a combination of cryptography. Cryptography is a kind of encryption, and encryption in layman's language is if I'm passing on information to baby study and we're sitting in a conference and there are two people in between us and I want to send an encrypted message. Encryption simply means I write a message on a piece of paper like this one, and then I scramble this piece of paper and then I send it across. As I send it across, if somebody intercepts that message and they open it, they won't see anything, to be gibberish. Basically, that's what encryption is. So you're sending messages across using mostly what's called physical public infrastructure like the internet, but it's highly encrypted, and as it transverses that media, people will not make of what it is unless somebody has got a special key on the other side to open it and get the message. So cryptocurrencies are peer-to-peer, meaning you can send them from one person to another directly without a central intermediary. You don't need a central authority. They are mostly decentralized. They will sit on a decentralized ledger. There's no need for a clearinghouse like we do for checks. And there are no agents to allow and facilitate the settlement and consensus. And it's said to be very immutable, meaning you can't disrupt it. Furthermore, it relies on what's called the private and public key. The private and public key is what I alluded first. If I'm sending an encrypted message and I scramble it, I sign that with what's called a public key and then send it across to another person. That person will use their private key to encrypt that message and read it and make sense out of it. So in a nutshell, cryptocurrencies are cryptography, which are cryptographic elements. There's a use of digital signatures and hash values, and they're used to transverse on public media, and then that way they're encrypted. So it's encryption on the digital platforms. The most notable cryptocurrency up to this day is Bitcoin. The reason is it was the first cryptocurrency to be introduced. And then up to this day, it still has the highest market capitalization, meaning a lot of people are attracted to investing into it. So what made Bitcoin very popular is it solved what's called a double spending problem. A double spending problem in a layman's language is just a technology where you cannot copy and paste. Copy and paste is you move information from one place to another. You don't want the currency which can be spent more than 2 times. And that's what Bitcoin addressed, and that's what's in the original algorithm. To this date, we have close to 3,000 different cryptocurrencies and alternate coins, and they're still growing. The reason is there's different characteristics, different features. They're making them faster, so you find that there are different variants of cryptocurrency. This is the original Bitcoin white paper that was released in 2008 after the 2008 financial crisis. And this is still on the internet. It's there for everybody to see. If you want to see where cryptocurrencies originally started from, you just go into your Google, search for a PDF called Bitcoin, a peer-to-peer electronic cash, and you get the beginning. It was done by a pseudonym called Satoshi Nakamoto. Up to this day, we don't know who this Satoshi Nakamoto is, if it's a person, if it's an organization, if it's a consortium. But look at the abstract of how the paper starts. They say it's a purely peer-to-peer version of an electronic cash that can be transacted online and used for direct payments. So this is an interesting paper. When you get a chance, have a look at it, and it shows you exactly where cryptocurrency is starting from. And then in terms of the cryptography, remember, like we said, you have a public key, which you use to encrypt the message, send it across, and whoever is a recipient of that message uses their private key to decrypt and make sense of the information. In a nutshell, this is a summary of what happens when you're sending cryptocurrency across. It also uses hash values, it uses digital signatures, but mostly it's about the public and the private keys. Further on, once you are dealing with those private keys are stored in what's called a crypto wallet. So it's just a form of wallet. Remember, it's a digital currency, so it has to be stored either electronically. You've got an option to keep it offline on a piece of paper, but it will be a string, a long string of numbers like this. It's a 256-bit, it's a hexadecimal number with 64 bits, ranging from 0 to 9, from A to F and E to F, but it's a combination. And it's very difficult to decrypt this and save it unless you are the owner of that wallet. So there are different forms of wallets. There are what are called cold wallets. These look like a thumb drive. You can put your private key there and keep it offline. You only introduce it when you want to transact. There are hardware tokens as well. And there are hard tokens, which are just on a piece of paper. Every time you want to transact, you have to get that piece of paper, punch in your code, and then you can move cryptocurrencies from peer to peer. There are different variants of cryptocurrency. Remember, we said there are over 3,000 now, and that's because you've got different attributes. But what's so common about Bitcoin, especially as a cryptocurrency, it's that the algorithm was made in such a way that there were limited Bitcoins. It's a locked algorithm. It was meant in such a way that there be only 21 million Bitcoins. Up to this day, we've mined slightly above 80 million. So the predictions are by 2040, all the Bitcoins will be mined, and those are the ones that will be going into circulation. And there's different sentiments there. Some predict the value will go up, some predict the value will go down. But the mining I alluded to earlier is what's called, is that how you get those Bitcoins out of the algorithm. So people use special software and very high computing power to solve algorithms, and then they get rewarded in Bitcoins. Other means is you can exchange it on a crypto exchange, but these crypto exchanges have to be regulated. At the moment, we don't have any crypto exchanges in the country. In Zambia, we don't have any ATMs, Bitcoin ATMs at the moment, because there's no such regulation, which we'll come to later. Moving along, just on another slightly a lower note. So the first transaction that was known to be transacted using Bitcoin was actually a purchase of 2 pizzas. So there's a programmer who was a software architect. He was based in Jacksonville, in Florida. What he did is just went online in 2010 and posted something, a broadcast, and says, if you bring me 2 pizzas, I'll give you 10,000 Bitcoins. And those pizzas were bought from Papa John's and they were delivered. And that's the first known transaction with Bitcoin. Up to this day, this 10,000 Bitcoins is worth more than 2 pizzas. Let's switch to the blockchain technology. So the blockchain technology is the underlying technology on which these cryptocurrencies operate. And they are just a distributed ledger. As compared to the physical ledger, we know it's just that it becomes into electronic format and is distributed, meaning it doesn't stay in one place. It stays on different peer-to-peer computers, and it's transacted in that way. So that's the technology which Bitcoin resides, and most cryptocurrencies are using that. In terms of the crypto summary, you have what are called miners. They're the ones that are solving those algorithms, getting the Bitcoins out. There's what's called consensus. Consensus is just agreeing that the transactions are valid. And then the hashing is the cryptography we talked about. And then they get written into the blockchain, which is a immutable ledger. And once they're written there, you can't change them. And then they exchange via peer-to-peer. So blockchain has a lot of good characteristics. And that's why we see the blockchain technology not just being used for cryptocurrencies, but other solutions, which we'll allude to later. But in a nutshell, blockchain is a ledger technology, meaning it's on a database stored for transactions. It's decentralized. It has no trust authority. It's immutable and it's transparent. Transparent meaning, people exchanging the blockchain or people exchanging the cryptocurrencies are using what are called private keys. So you won't know who's dealing with who, but you will see the transactions going through. There's also issues of scalability, limitations, and complications, especially for Bitcoin. And that's why we've seen so many alternative coins, because people are trying to solve this problem of limitations and scalability. And now we have other cryptocurrencies like the Ethereum and a lot more. So just to allude to other applications of blockchain technologies, we've used that a lot in digital identity. There's a lot of digital identity in terms of, for us here, we use national identity in terms of the NRC. Some countries are applying it to use that as digital identity. There's application also in terms of smart contracts on an Ethereum protocol. In Estonia, they've introduced it and they're using it for active documentation because there's non-repudiation there. Once a document is authenticated, you can't dispute that. So it's also being used for physical assets in terms of registries, in terms of precious metals, precious paintings. Once they put it on the blockchain, you can track it all the way from the first owner. And if you're buying a painting or a precious metal, it will show where exactly it started from. This has been applied a lot to just deal with illegal mining, blood diamonds and whatnot, where they make sure they're authentic and they can trace it. Other applications, I think back home in Zambia, we saw a project that was about to be implemented by the Ministry of Lands. It was in collaboration with a US organization. I don't know how far that has gone, but they were trying to implement land titling on the blockchain. That way you can never dispute who owns what land. That way we can eliminate issues of fraud or selling a piece of land to two different people. So there are numerous very advantageous applications of the blockchain. In terms of the concerns for the regulators, there are advantages and disadvantages of blockchain. So in terms of the advantages, they are transparent, they are easily accessible, they're easily moved peer-to-peer, they're decentralized. And in terms of transmission speed, they're faster. But on the other side, there are legal risks. They are volatile, meaning their value is not constant and it keeps changing very frequently. So in terms of investment, you can invest in it today, it's worth 50 kwachas. Tomorrow you find that it's dropped down to 5 kwacha or in a couple of hours. So volatility is a huge risk. And then there's a possibility of, since you're using private keys and you don't know who exactly is behind that, it's being used sometimes for fraudulent activities. And that private key which you own is the key or the password to these cryptocurrencies you own. If you lose that private key, it means you've lost all your cryptocurrencies. And transactions are irreversible. So if you lose that and somebody transacts, chances are that you won't reverse that. So Bitcoin is a currency at the moment, and for the regulators, they're saying since there's no KYC, which is know your customer, there's no recourse. If you are transacting or dealing with them, you cannot, just in case the deal doesn't go right and there's a fraudulent activity, you can't go to an authority and say, okay, I lost this. There's no way they can trace it. So it's non-recourse and there's no protection for the consumer. So those are some of the biggest concerns that regulators have. But in terms of the benefits and the risks of cryptocurrencies, the benefits are that the transaction fees are lower and it will be easier to adopt. It's easy for tracing transactions for things like anti-money laundering and terrorism financing. The The risks, on the other hand, are that you won't know who's transacting because they're using those private keys and there's no central intermediary. And if a transaction doesn't go right, there's no recourse and you don't have anybody to run to look at why the transaction went down. In terms of the position of the regulators, I'll speak to what the Securities and Exchange Commissions and Central Bank of Zambia, where they stand. For the Central Bank of Zambia in 2018, there was a notice that was issued, and I think it's still available online. It just stated that cryptocurrencies are not legal tender in Zambia. The Securities and Exchange Commission also in the same year issued a cautionary statement cautioning that, investing in cryptocurrencies is at your own risk. So you're not protected as you invest in those. They are not regulated at the moment. There's no KYC, which is know your customer. There's no recourse, and there's nowhere you can go to seek help. So those are the pros and cons of these cryptocurrencies. In terms of the position of regulators, the summary of the statement from the Central Bank of Zambia is, I can summarize it in that it actually captures and speaks to the Bank of Zambia Act, where it explicitly states that to date, the Bank of Zambia has not issued any form of cryptocurrencies. Cryptocurrency is not legal tender in the Republic of Zambia, and the Bank of Zambia does not oversee, supervise, or regulate cryptocurrencies. The general public should therefore be fully understand and be aware of the associated risks of these cryptocurrencies, and that's why we're having this discussion today. So at least we just have an appreciation of how they operate before we can take that risk. So, and I think they conclude that in line with the Bank of Zambia position, that regulations should be constrained, but we have to allow for innovation to thrive. So obviously there's options to allow for innovation to thrive, but people have to be mindful of the risks as well. In terms of the global trends, we've seen a lot of case studies where even central banks like the Republic of South Africa did a project called Project Khokha, where they were using a distributed ledger to allow for settlements. And I think they're doing a second phase. There have been projects in Canada, there have been projects with the monetary policy of Singapore. And back home, I think, like I said, we're trying to allow innovation as we allow enabling regulation. So in the near future, we'll see what's called a regulatory sandbox, which is just a testing environment where all these high-risk solutions or financial payment solution will be allowed to go. And then, we monitor that and see how viable they are. That is how we are going to allow for innovation. So innovation is good because of all these advantages. So everybody will have a chance to actually showcase these innovations and then probably, on a smaller scale so that we manage the risk. If we see that these technologies are innovative and they can work, then we adopt it and then take it into the mainstream financial solutions. I can also mention that there are a lot of initiatives in terms of central bank digital currencies. These are they can be wholesale, they can be cross-border, they can be retail. This is just where, instead of using the physical cash, you put some of these transactions electronically, and that way it helps to move money across and adopt all those good benefits. In terms of my final thoughts, there's a saying that it was coined not too long ago that says data is a new oil. Some people say data is a new gold. And data now is fueling most of these financial transactions. And for us, we need to make sure we have resilient financial market infrastructure where all these transactions transverse. And also that as we mitigate all these risks, there's another saying that says, if you're not paying for any product online, like say Facebook is for free and Twitter is for free, it means that you are the product. So meaning your data is being used for analytics, and that's how you're paying for that free product. So with cryptocurrencies, there has to be a balance between their benefits and the risks. But remember, they are not regulated. There's no know your customer, there's no recourse, and there's no consumer protection at the moment in this jurisdiction. So as we trust the blockchain technology and leverage on it for these cryptographic algorithms, we have to learn and understand that there are risks which we need to avoid, but we have to understand the underlying technologies and how it operates. We hope we all be aware and maybe through all these introductions become more knowledgeable And to close, the Securities and Exchange Commission and the Central Bank do not recognize cryptocurrencies. So they are not legal tender in Zambia. But remember, be a smart investor for a better life. I thank you very much. Over to you, Sitali.
Thank you so much for that wonderful presentation, Kombe. I'm sure we have heard for ourselves and you have demystified cryptocurrencies for us. Before we get into our Q&A session, I'll just allow Benson from the Securities and Exchange Commission to just chip in and give our perspective as a commission. Benson?
Thank you very much, Stali. And thank you very much, Kombe, for that really enlightening and wonderful presentation. I just wanted to just chip in slightly with regards to cryptocurrencies from the perspective of financial assets as well. I know Kombe dwelled a lot on the fact that they're not currencies, even. However, as you mentioned earlier, with regards to the disruption that these have had in the financial market, this disruption has also extended towards the capital market space, so to say, with regards to financial assets. So some of these digital cryptocurrency assets have also, to some extent, possess characteristics that mimic or are similar to financial securities. One particular example I can just sort of highlight is what are called initial coin offerings. So in short, they're called ICOs. So these are very similar to initial public offerings, which are IPOs. This is when an entity, a company is looking to raise financing, either for expansion, for growth, or any other reasons. So they go out to the public and issue securities and invite them to then be part owners or shareholders in that particular business or enterprise for the exchange of their capital. And so we've seen similar initiatives or products being issued in the cryptocurrency space, where entities or a group of people are coming up with either a new cryptocurrency coin or a new app that's related to a cryptocurrency, or just a new product or service. And in exchange for these coins or part ownership in this particular project, you give them capital. And so you can see the similarities because it's similar to an IPO, but in effect, it's cryptocurrency based. And then there's obviously been some debate around whether these amount to financial securities or not, to financial assets or not. And obviously, as Kombe once mentioned, we as the Securities and Exchange Commission highlighted our position in our 2008 notice with regards to these types of assets. So these are treated on a case-by-case basis, depending on their characteristics, obviously, because like I said, just because some of the characteristics are similar doesn't mean that it's a financial security or financial asset. So it's determined on a case-by-case basis. However, the Commission obviously wants investors and potential investors in these particular assets to exercise caution as they fall outside the regulatory ambit of the Securities and Exchange Commission. And as Kombe mentioned, that essentially means that there's no recourse in the event that you are defrauded or a transaction does not go your way. However, again, to just reiterate the sentiments of the notice that we issued, the cryptocurrency space, particularly the blockchain technology, is really promising, and is a lot of reason to believe that it's going to provide a lot of positive disruption in the financial space. And obviously, it comes with a lot of opportunities. And so the Securities and Exchange Commission is closely monitoring the space, obviously trying to look out for any opportunities that would benefit the growth and development of the capital markets and the financial markets in general. So thank you, Stali. I just thought I'd add that. And thank you, Kombe, once again for your wonderful presentation.
Thank you, Benson, for that. Okay, we're now going to start our Q&A. And our first question that we have today is from Fidel. And the question is, when is Zambia likely to have cryptos exchange? What have been some of the hurdles? South Africa has Luno and Uganda has Binance. Please enlighten us. Kombe, would you like to take that?
Yeah, sure. So first, mostly, thank you for that question, but I think I'll try to explain what a crypto exchange is. So a crypto exchange is where cryptocurrencies meet the real life. If you want to take that crypto you've earned outside and exchange it for real money, you go to a crypto exchange and then get the equivalent of that crypto out. We don't have any of those at the moment in Zambia. The reason is simple because remember, cryptocurrencies are not yet regulated and they're not legal tender. So if it's not legal tender, this jurisdiction just doesn't allow that. But in the future, there's a lot of positives in regards to, where you actually have, in terms of, instead of these cryptocurrencies being anonymous, you have them registered like we do for the normal KYC, know your customer. So at the moment, there's no relation between, what an individual holds, which is just a private key, to what they're getting out. So this space is still a gray area, but I think, like I said, there's a sandbox in place which will allow for a lot of these experiments to go on and see how best we can do that. So I can't put a time frame on when exactly we'll have the first exchange, because it will first start with the regulation coming into place. If we can regulate these currencies, then we'll move on from there. But remember, I also mentioned the issue of the central bank digital currencies. So we're hoping those can get traction also, and we have a little bit a better way of regulating this, where we have proper KYC and we can cushion all customer recourse, and that way we can have something more coordinated. So in terms of when crypto exchanges are coming, I don't see that coming anytime soon. Thank you very much. I don't know if that answers the question.
I hope that answers your question, Fidel. And Kombe, speaking of sandboxes, I know the Commission plans to launch our sandbox by January of 2021, at least to admit cases. We have already drafted a framework. And maybe you could also comment from the Bank of Zambia side, because we have a question concerning when the sandbox is likely to be implemented from your end. Kombe, you're muted. You're muted.
Sorry about that, Stali. So I was saying I'll start from our strategic objectives. So we have a new cycle of strategic objectives that's running now for the next 4 years. And one of those is we've put it in 2 frames. One of them is to have financial stability. The other one is to have financial inclusion. I'll comment mostly on the financial stability side, because that's where the sandbox falls. So we're trying to come up with an unregulated space where people can come up with innovating solutions, bring them to the sandbox under supervision on a limited amount of time. We see how those operate. If they've got traction, then they can go to the mainstream financial solutions. We've already started working on that. There's just guidelines that are coming into place, and then we probably have to make sure those are gazetted before they go out to the public, and then we can start that sandbox. So maybe in the first quarter of next year, we should see the central bank sandbox coming out, and hopefully we can have a lot of innovative products come in. And remember, we're a regulator and we're trying to promote innovation. So we want to regulate and promote innovation, not where we stifle innovation. So I think that would be a very exciting place, and we're hoping everybody can look out for that and bring all those innovative financial technology solutions. Thank you.
Okay, thank you for that, Kombe. We have another question from Chandler. He says, how do cryptocurrency companies engage with regulators in Zambia?
Okay, so is Benson still on the call? I'll allow Benson to go. He'll talk about the securities, and if you have you want to issue an IPO, how you go about, and then I can talk about the central bank.
Okay, Benson. Benson, are you still here?
Okay, so let me go first. So it's how do you interface with these with regulators? Remember, cryptocurrencies is a type of innovation. As we stand from the monetary point of view, especially for Bitcoin, Bitcoin is not legal tender, so it's not regulated. But there's a lot of financial solutions that can reside on the blockchain, and those can still be looked at. So on the financial side, if you have an innovative solution, it has to be classified first. So you probably do a concept paper of what you want to do, and then come through the central bank. We've got a banking, currency, and payment system section who will look at your proposal and then try to classify where that proposal falls. If it's a regular payment system solution, we already have channels for that. So it can go through the normal channels, and then if it goes through all the approval stages and it's approved, you also start using it. If it borders on what's not regulated, we'll be able to advise you accordingly and hopefully maybe take you on board as we start the sandboxing process.
Okay.
Thank you.
All right, thank you for that. Benson is back. Benson, would you like to comment on that?
Hi, Stella. Yes, sorry, I had a bit of trouble with the connectivity. Yes, so with regards to the SEC and cryptocurrency companies, ideally, we would need to possibly just have a quick meeting where you sort of explain the business model, the idea that you are either trying to operate or are operating and then would like to operate here in Zambia. It's very similar to the process that has been described by Kombe. So then after we hear that pitch, we would then be able to determine with regards to which licensing regime you would need to fall under. And so if it's an exchange, for example, then there's some requirements for exchanges. If it's advisory or dealing, there's requirements for that. If it doesn't fall within any of the current licensing regimes, but it falls within the security space, we also then have the fintech sandbox in place. So we could then see how best that could be dealt with. But again, it really depends because it's case by case, depending on your business model, your idea, and what exactly you're trying to do. So we need to sort of just screen through that and then determine where exactly it can be placed. But the regulators' doors are always open. If you're not sure, if you need to consult, please feel free and we'll be able to engage with you.
Yes, thank you so much, Benson. And maybe just to add on to what Benson has said, so engaging us is admission into the sandbox, the one that we are setting up as the commission, will be on a case-by-case basis, as Benson has highlighted. And it will be driven by our fintechs out there. So you do have a platform to bring up your ideas, and they will be dealt with on a case-by-case basis. I'll get back to the comments that we have in the chat. We have one from Pumulo. Stable coins provide hedge against the volatility of a non-stable coin such as BTC. We as a country stand a chance to benefit from the regulation and collecting of most widely adopted cryptocurrencies such as Bitcoin. And then we also have another question saying that, so seeing as cryptocurrency is not yet legalized in Zambia, does it mean it's an illegal act? This is from Muliokela. Kombe, would you like to take that?
Yeah, sure. I think I'll start with the first one on the stable coin. Yeah, so I think that's a very good question. Thank you very much. And maybe just for the benefit of the audience, what stable coins are just coins that have got backing from real value. So it can be a fiat currency backing it. It can be a commodity backing it. You can have gold backing it. So meaning an example of that is what we've seen, I think last year, Facebook did a paper on what they wanted to establish as Libra. So Libra is a form of a stable coin. So it's not just a coin, it's not just a cryptocurrency, but it's backed by real value. The advantage to that is, it will inherit all the advantages of cryptocurrencies, But better still, it's got real backing from a fiat currency or from a commodity. So those are the ones we want to do. We're looking at as we open up this sandbox. We are hoping such solutions can come on board, and obviously we evaluate them, and that's a very innovative space. So those are the solutions we're looking at, and the central bank we're trying as much as possible to welcome that. We're hoping the sandbox can be up. So this you can showcase most of those innovative solutions. And like you said, those have got a lot of positives, and we're looking forward to some of those. So stablecoins are a way to go because they've got some backing as compared to the cryptocurrencies, which will depend on speculations to get their value. So stablecoins, yes, we're hoping we can showcase some of that as the sandbox comes up. The other question was regarding, I think it was regarding why cryptocurrencies are not legalized in Zambia. Does it mean when you transact, is it illegal? Remember, it's a transaction online, so nobody will give you that recourse. So that's the reason we're having some of these discussions, because we want people to understand the basics. We want people to understand what a private key is. We want people to understand how to keep that private key if you lose it. We want people to understand how to just have an appreciation. We cannot police. If you are in a part of a country with internet, you can subscribe and get a private key and transact. The only caution is that, remember, it's not legal tender. Even if you transact in it, there's no recourse. If a transaction doesn't go your way, there won't be any regulator to back you up. So you do that at your own risk. But we're hoping people can evaluate all the risks, can evaluate the benefits as they go into these things. And if you are going to invest in it, don't invest all your money, hard-earned money. Don't invest all your pension, because the transaction might just go north, and then you lose all your pension. So obviously, if you have a 20 kwacha to spare, you can see how it works. But it's not legal tender, remember, and for you to get currency for it, there's no exchange, so you can't exchange it. For that, you probably have to deal with it peer to peer. So there are all those pros and cons. So we're hoping from these interactions, we can learn and we can manage our risks properly as we think about investing in these assets. Thank you.
Okay. Thank you, Kombe. Mr. Kapalu had a comment with the question, seeing as the populace is far ahead in terms of involvement in crypto industry in Zambia, isn't the government playing catch up instead of leading the way? And Mr. Kapalu, I also noticed that you had your hand up. Is this the question that you had? Okay, maybe you can go ahead and ask your question quickly so that we can get back to the other comments. You are muted, so we can't hear you.
Hello, can you hear me now? Good afternoon. Thank you very much, Mr. Kombe and the other present. Is it Benson for the presentation done? The crypto industry in Zambia has actually been around for a very, very long time. I think we have been talking about crypto since 2008, 2007, or about there, or is it 20? The past 3 years, I mean, we have been talking about crypto, but I think the government, like I'm saying, is playing catch up. But then my point is, we have a blockchain association, which we have formed. It's a pity just about the time when we formed the association, we couldn't go on because of the COVID-19. But we are hoping that with this thing, so-called COVID going down, maybe we might have a bit more of interaction with SEC and Bank of Zambia. And it would be nice to know exactly who we could deal with in these institutions, because I really feel the more we delay, I mean, countries around us, if you look at South Africa, you look at Kenya, you look at Nigeria, Ghana, Rwanda, Ethiopia, all these countries. I mean, a country like Ethiopia is already doing smart contracts on selling their coffee. So why are we taking so long, us here, to use a technology which is really beneficial to, yes, there are some things which need to be regulated. But I think it would be nice to have these things done quickly, because even your sandbox, I'm told it will take like a year checking out what you are doing before you're actually allowed to proceed with your technology. I really think much more needs to be done quickly by the regulators so that people can actually benefit from the advantages of the crypto industry.
Thank you so much, Mr. Kapalo. And I see there's another comment concerning the delay, where there's concern to say we are delaying and we can't afford to any further delays concerning cryptocurrency adoption. Then there's a question from Joanne. This is a further follow-on question to Chandler's question. How then should financial institutions and financial service providers treat companies dealing in crypto? Kombe, would you like to comment on that?
Yes, please.
Joanne,
So,
how should they treat the companies that are dealing in cryptocurrency?
okay, so obviously we know there's a lot of transactions happening, and remember what we said, they're peer-to-peer transactions. So if people are already dealing in that, we're saying at the moment that's a space that's not regulated, but we are hoping people can understand the risks. So even if it's not regulated, people have to understand what the risks are involved. So if you're dealing with cryptocurrencies and then you decide to onboard people, it's very difficult for the law to be on your side, because that space is not regulated. So that's where like Benson was saying, we have to engage. If you already have a solution, bring it to the table, come to regulatory authorities and see what benefits we can get out of it. And then if it's a space that can be channeled into the right channels and we get formal regulation, let's keep the doors open. So regulators are there to facilitate and not to stifle innovation. So if there are those brilliant ideas out there, let's start engaging. And I think at the end of the presentation, Sitali will share the contact details and the URLs where you can start these engagements. And better still, you can just walk in and ask for somebody who can help you with those things, and we'll open the doors, chat, and see the way forward. So we are open to new innovations, and we are hoping all these innovations can help the financial services industry and the securities industry be more efficient and more reliable. Thank you.
Thank you, Kombe. We have another question from Pumulo. Cryptocurrency stands as extra legal. So if an exchange were to be operational in Zambia targeting people already engaged in crypto trade, would that be an issue? And then there's a follow-up question to that. And there's another one saying, do I need regulation to install a crypto ATM in Zambia?
I'll start with the last one. Do I need
ATM
for an ATM? Absolutely, you need to, because remember the central bank is the regulator of all finances. So if a crypto exchange has to come in this jurisdiction, it has to be formalized. So our word of caution is make sure you engage and we advise each other and understand where we're going. So at least we are all in a good space. The other question study was on
if an exchange were to be operational in Zambia targeting people already engaged in crypto, would that be an issue?
Yes, so that's similar with the Bitcoin exchange, because now you're dealing with crypto, and that's like, remember what I said. So an exchange is where crypto meets the real world. That's where you have to now convert your crypto into a currency and take it out. So obviously, even on that front, we will have to engage. So probably just make some time, come to the central bank. We've had organizations that have come through and we've discussed some of these things. Some of them probably will end up in the sandbox, but you have to make sure you follow all the regulatory guidelines in the space. So same with the exchange, and same with an ATM. You still have to engage with the necessary authorities and just get some guidelines, so at least we operate into a safe space. Thank you.
Okay. We seem to have a lot of comments on this subject. It's a heated one. There's another question saying, can we have a cryptocurrency that is redeemable to real value or guaranteed locally? And then the other question says, seeing as cryptocurrency is heavily technical and is underlying infrastructure ready, I mean, such as as internet, electricity, and bandwidth, not so in urban areas.
Okay, so maybe I'll start with the infrastructure side of it. So for all digital financial services, you need to have reliable infrastructure. For all financial markets to operate, you have to have reliable infrastructure. And I think as a country, we've made very good trends. We have the information and technology regulator in the name of ZICTA also making trends. We have a lot of reliability on the mobile. So in terms of the infrastructure, we're getting there. We have terrestrial fiber optics networks running all over the country now with different service providers. So we have reliancy, we have high availability, we have redundancy on those. So in terms of the infrastructure, we're getting there as a country because we have so many digital channels that can be transmitted. We have the mobile. We are fortunate enough, we still have the second generation 2G, and you can still use your feature phone. So all those innovations on all those platforms will easily be taken care of. And I think just to mention here, financial markets infrastructure, stable financial markets infrastructure translates into financial inclusion, and we're hoping we can see that. So in terms of infrastructure, we are getting better, and we are almost there. The other question was on, did you remember the other one before the infrastructure question?
Yes. Let me see.
No, I think it talked about the stable currency.
Yes.
So remember we alluded to a stable coin. The stable coin is the one that's backed by fiat currency or an asset. So those are the solutions that almost the whole world is moving towards. They're looking at stable coins. They're looking at these solutions. There's also an issue of central bank digital currencies, which we are making a lot of research and advancements in. And those are welcome innovations which we're trying to bring on board. So most definitely, yes, we'll see a lot of traction in that space. Thank you.
Okay, so we have another one. Kindly clarify what you mean by regulate Bitcoin. What will the regulator do to make cryptos legal in Zambia? Is the regulation for investing in Bitcoin or for transacting? That is the purchasing with Bitcoin.
Okay, so that's a twofold question. Remember what Benson was talking about, the ICOs, the initial coin offering, and if they're securities, we'll have, and that's why you're seeing a lot of these regulators coming together and trying to manage expectation, because some of these investments will cut across different regulators. So regulators also have to coordinate and come together and see how best we can manage this, depending on what type of investment it is. So you're right, even in terms of Bitcoin, in terms of regulation, if it's being taken on as an investment option, if it's being taken on as a currency, those regulations would differ. So I think we'll see a lot of change coming up, and we'll see a lot of innovations. But for me, I'm excited because there's regulators are bringing in sandboxes. Sandboxes are like a playground where we can bring all these technologies and we see what risks we have. We see how we can manage the risks and make sure we can come up with innovative products that can contribute to the development of the financial space or the security space. And generally, just I remember Kapalu was mentioning the advantages of blockchain. Blockchain can be used for so many things, so we can leverage on that and harness all those benefits to solve some of the underlying problems we have on the continent and Zambia in particular. Thank you.
Okay, thank you. Daniel, you have your hand up. I've seen you've got a comment in the chat, but maybe you can just say it.
Hello, everybody. So I think the question that I has just been addressed in terms of what the regulators are doing in sandboxes, because when you speak of playing catch up, you have these comments, and comments usually express interest, how many people are participating. So you find that if regulators have done their research, people are actually participating in this financial system. So in that case, there are two participants here. There's an innovator and there's a consumer, person that just wants to bring that innovation or part of the infrastructure to be able to provide the goods or the service in the space. And there's person that requires the knowledge to be able to make informed decisions as a participant. So regulators, I know, are focused on the education part and the warnings, but the sandboxes, I don't know how much emphasis is being put in terms of regulators encouraging innovators and the producers in the blockchain space to be able to bring their ideas on the table. And that's where regulators can regulate. They can't regulate the cryptocurrencies themselves, but they can regulate the infrastructure that will be built around the financial system. So as long as we would keep on looking at regulating cryptocurrency, it will be a dead end because that won't be possible. But if you can work with the innovators, create the infrastructure, and that's how the regulators can regulate the blockchain industry. I think that's my part of my contribution.
Okay. Thank you, Daniel. Benson or Kombe, would you like to react to that? Or we can move to our next question.
Maybe just to echo Daniel's sentiment. Yeah, that's very true. And remember, I've been alluding to where crypto meets the real world. And that's where all that infrastructure comes in. Infrastructure like the exchange, where we get proper KYC, know your customer, and then we manage and we introduce consumer protection and then protect the whole space as we regulate. So yeah, Daniel is spot on, and we'll see a lot of developments in those areas. I'm not sure if Benson wants to add.
Yes, again, just to agree, Daniel, it's, for me, the way I see it is the regulators are basically saying, we see the opportunities that this whole wave or this whole disruption possess, right? But then there's definitely also risks because there's a lot of aspects of it that a lot of people don't understand. It's quite complex, and there's all of these questions, right? So we do not want to stifle the contributions that this particular disruption are going to bring to the financial markets, but at the same time we don't want to ignore the risks, and hence the developments of Sandbox and all of these other innovations around that, so that we could try and leverage it in a controlled environment as everybody sort of comes to speed with its complexities and understanding exactly some of the risks that are involved. So it's sort of a balancing act, and that's exactly what we're trying to do. So I totally agree.
Thank you, Benson. We have a comment from Mr. Shilue. It's a question actually, do we see cryptocurrencies posing a threat to the survival of the formal banking sector? Do you think our slow adoption to the cryptocurrencies as a nation may in fact work against us, especially that the leading economies are fast embracing them? Kombe.
Okay, so in terms of the formal financial sector, there's a research has showed that there's very small percentage in terms of cryptocurrencies globally. I think the most concern was how do they affect monetary policy. At the moment, there's very little effect on monetary policy. So, and that's why it's an interesting space, because it's growing. So you want to harness the advantages, and then be mindful of the risk, like Benson said. So it's a space that we're watching very closely. And hopefully, like I said, there are other variants of cryptocurrencies that are more stable, like stable coins, and more recently, central bank digital currencies. And all those, you find that the underlying technology is pretty much the same, but you have to weigh the pros and cons, look at the advantages, and look at all those things and how they go into place. Thank you.
Okay, thank you. We have another question from Java. Would cryptocurrencies in a way help with the Kwasha's volatility for other major currencies,
So that's the volatility and cryptocurrencies. Again, research strongly shows that there's no correlation at the moment. Remember, it's still not legal tender here, especially in Zambia. So it doesn't enter the formal financial systems. We don't have exchanges, so you can't trade it for ZMW. So the effects are more or less negligible. Like I said, the space is there, it's growing, and regulators are mindful that they have to keep an eye, and that's why there are all these efforts to make sure we watch and be ready, and where we can intervene, but also try to encourage as much innovation as we can, because we know there's a lot of advantages to these solutions, and hopefully we want to harness all those advantages as we are mindful of the risks again. Thank you.
Thank you so much, Kombe. Unfortunately, we have run out of time. We note that this is a very interesting topic, and so as we come to the end of the first cycle of the joint messaging campaign, which is next week, we will start the cycle again, and we'll feature the topics for a second time. So we will have a chance to discuss cryptocurrency once again, and we'll have our guest speakers to shed more light on the same and to answer the questions that we have. So before we close, we'll allow for 3 more. I'll just take 3 more questions from the chat. Please note that our Facebook pages are active, and we can continue the conversation there. So you can still post your questions and they will be responded to. We have a question from Tulani saying, how can I make a genuine Bitcoin wallet? Am I able to exchange Bitcoin to physical cash, and how? Then we have a comment saying, I feel we need to be called as those who have been in this industry and have benefited to have a say on a round table with the regulators, so as even the regulators can have a feel of what the other world has in place. Who knows, maybe the solutions are with us, the consumers of crypto. And then there's another question, do we see the Kwacha becoming full digital currency to counter the risks of an unregulated cryptocurrency?
So, Study, we have a lot of questions. So maybe we can package this and then probably just respond to them individually, and then we can send it out. I don't know how you get the attendance lists. If you maybe from the registration list, we can share the questions and then probably just distribute them. Yeah.
Yes, we can do that. Also, please just send your emails in the chat. I noticed that there was probably no registration for this one, so please just drop your emails in the chat, then we can respond to the questions and send you the responses from our presenter. Before we end, we have a short poll that we would like to take. Sydney, I hope you're ready for that. We just have 2 questions that we'd like you to respond to as you're dropping your emails in the chat. There it is on the screen. It's a simple yes or no. We just want to know whether the presentation has had an impact and you have learned something for today. So the first question says, are you comfortable with how cryptocurrencies operate? You can give a yes or no. Then the second one saying, considering the pros and cons of cryptocurrency that have been highlighted today by our presenter, would you consider investing in cryptocurrencies? Okay. Thank you so much. I've seen we have a number of email addresses that have come through, and we have Maria and Imelda on standby to take all the emails. So you will hear from us. I just want to thank our presenter for today. Thank you so much, Kombe, for the wonderful presentation and the interaction that we've had. And Benson as well, thank you so much. And to our crowd, our audience today, we thank you so much for being with us. We do understand we haven't exhausted everything, but as I've mentioned, the next cycle continue, and the topic will be tackled again.
And Stali, just to add, sorry if you might let me just interrupt you.
No
again, I think mine's just to encourage all the innovators and any other people that are curious with regards to the cryptocurrency space to feel free to engage the regulators. As Kombe mentioned, the Bank of Zambia's doors are open. The Securities and Exchange Commission's doors are open. If you have questions, things that you need to clarify, ideas that you are not sure about with regards to regulation, please feel free to come through and we can engage. Thank you.
Thank you, Benson. Kombe, last words from you.
Yeah, thank you for having us. And I think for me, it's the interactions. The interactions should continue. Like Benson mentioned, we need innovators. It's a digital era now. You know, you can innovate from any place in the world now. So if you've got a brilliant idea and it borders on digital financial services, on crypto, on mobile solutions, you know, bring them up and let's exploit them together, and let's see how we can harness those brilliant ideas and probably come up with solutions that solve problems for our economy, solve problems for our region. And I think it's welcome. Let's keep engaging. Regulators' doors are open. You know, it's not a closed door policy anymore. If you've got an idea, bring it. We have a look at it and we walk through it and we advise each other and we all learn from each other. So thank you very much for the participation from everyone, and we hope we continue engaging. Thank you very much.
Thank you, Kombe. And thank you again to our guests, to our participants for today. We hope to see you next week. Next week's topic is just investment fraud. We hope to have an interesting discussion around that as well. And as we've mentioned, the conversation continues on Facebook. Please drop your comments there as well. Thank you so much. Goodbye.
Is Kombe still on the line? Afternoon, Kombe.
I think he's just left.
Okay, we'll catch up with him. Well done. It was very interactive. We had a lot of people. Ben is still probably on the line. Well done, Ben. It's like they were both racing to be out of the call.
Yeah.
Yeah, I know we have a meeting in a bit, so probably Ben was trying to race for that. We'll see you on the other side. That I'm not sure whether you're joining this meeting, but I need to go now.
Okay, thank you.
Okay.
Maria. Maria. Just Tonga, hi.